Let's see here. Let me get some charts up. What a day. It is this one. All right. All right, got all this up now. Ready to rock here. So, what do I got here? Let's see, Chinch's camera still. I'm gonna turn him off for him. Okay. All right, let's go here. So let me just slide this on up here. Had a definite counterbalance today. So in the morning here, we had our kind of push up here. I told you we were going to test this 18,250 on the VIX. We did test that. It was rejected. That rejection brought us down to the 4-hour 20. Where we swapped over at 10 o'clock and pushed on down from there. We are not quite yet setting new lows. You can't see this here, but I'll draw the line over for you. So maybe I'll try again. Shitty line, but we're right close to the lows from yesterday. If we take those down, then we should see all of this turn around. I don't see anything at all that tells me this is anything other than a normal pullback. Is what I had described earlier on the call here this morning. 4-hour 9, we slipped slightly below that. And we held. So we held on that bounce. Yeah, we had a nice strong bounce to start with. Then we kind of teetered off, and we're just kind of meandering here. This does look like kind of like a double top where we'll push back down over to here, probably test this bottom again, or this bottom here for ES. And then on the 4-hour candles, we can see clearly here the yesterday close. We're just sitting at, right near that level right now. Let's look at it from ES's perspective here. Get a little better drop on it. So here we are, data pushing out in, popping up here. We've got the 10 o'clock run here. This is the actual PMI came out. It came out slightly hot as I had projected. That slight heat didn't have immediate effect, but we did kind of twiddle around here and let everybody kind of crunch those numbers to see what that looks like for their forecasts, which then you can see this very, very simple cascading fall here. I know a lot of money was made over in Ginger's channel with some of these shorts. I did as well in a different way. I ran a strangle earlier, so I ran the run up, sold for profit, and then I sold my short leg on my strangle early. But still did well on the whole overall. So here we are on the bounce. This is that 4-hour 9 bounce here. You can see this in the ETA, the RTH 4-hour 9 line here, which was totally respected. Set a new low of 77.50 for the day. Pushed back up hard. Took out the 5-minute 9, the 5-minute 20, consolidated, and then in that consolidation gave us continuing to consolidate. But we've got a mixture of results here on the 5-minute. What I'm looking for now is the back test again at these levels to come in and for us to hold that 4-hour 9 level and be able to push up on higher from here. So that should be the rest of the day in a nutshell. You can see VIX falling. You can see VIX falling. You can see VIX falling. There. You can see oil falling. And that makes the most sense from that standpoint. You see Bitcoin rising. So there's your third indicator. We didn't look at this earlier this morning on my charts, but I wanted to show you as well. We have skipped out on this descending channel. We've created a new one. We're in a new spike here. I don't have enough data yet to formulate the new channel here. If I wanted to take kind of some of these runs and try to formulate in, we could look at that and say, okay, here's kind of our, sorry, there you go. Now see how that lines up. See the tops here on this type of channel. There's one right there, and then here would be the bottom of that channel pushing on through too, which sorry, there you go. There. So that would make some sense for us right now in terms of channel shopping, and we can use that there. But that puts us at the top on today's pushback, which I'm not so sure I believe that. Although if I do one more line and I kind of scour the middle here slightly, let me just bring this thing up slightly more. There we go. That would make sense for this area here and this, and we have a kind of clear delineation of the path. So coming back down on the bounce to push further would make some sense, and then we could, break out from this top again is all possibility. So I'll leave that for now. This is what I was tinkering with earlier today, trying to find the top here for us all so that we can manage this in the next week or so. Also, what we're going to expect as we go. So looks pretty favorable for SPY in terms of being here. Obviously, you want to push on through that channel top here, but we did it so quickly. When we tend to do that, we will find that and continue up there. We might come back down, bounce, and push back up, which is totally expected at this point. NVIDIA doing great. This is running. So again, I don't want it to go 100 miles an hour. I want it to follow this trend line. We are following that trend line very healthily. We're looking at +9 for the day, which is a little more than I like, but that's okay. We're still at this steady growth here. Always expect back tests on this trend line here, or floundering as we get closer to the trend line and continue to push up. But fresh highs here. Everything looks pretty static here. It looks pretty good. We are getting close to all-time highs here. This is going to be pretty amazing because we had that split, and now we are getting close to the high levels again. This was in that $1,100, $1,200 range, wherever we were. So heading back up into ATH again, we're not too far away. That looks great, actually, for NVIDIA's growth trajectory here. I have no issues with NVIDIA anywhere here. I do want to help you guys out with some stops. Where is my stop? My stop is gone. Yeah, okay, we make a new one. So let's make a new stop, put this out just in case. So what are we looking for? Well, first thing I want to do with NVIDIA before I add in the stop, I want to look left here and see what we got. So we've got a pretty clear path in here. We're up on that upper threshold here from the last reach where we created that ATH before, and I want to say, looking from that breakdown start there, we've got that 212 area, which has been monkeying with us forever. Once, twice, three times a lady. Here we are again and again. 214, 212. So that's where we're going to need to look for it. We're going to look for our stops to be in the 214 range right here. And this is going to be called what I always call it, which is exit. So there's your exit on NVIDIA right now. Losing that level would create a problem for this breakout. I want to point out the 4-hour 9 is above this level, and that also means it is above these breakdown levels. So these are now confirmed failed breakdowns all the way across to here. The only way to get the ultimate confirmed failed breakdown is up here in the 230s. But next big target is going to be that 223 range right here for where we're headed, and that is obviously we are on approach. So we are about 4 points away, 3-4 points away of NVIDIA having a stall point and potential war with itself here, as we always see on the channel. So again, looking for potential static up here at this range. This would be a good take profit range too, unless we blow through it. So proceed with caution here. Again, the back test here is only going to push us higher again, so I'm not really worried about that in either direction, but you may want to look at this a little cleaner. And always short-term contracts. You always guys know what to do with those, please, by now. Let's see, Soxel. All right, so we had the pullback here. We had our first and second candles of the day. Here's our 8 o'clock, and here is our 12 o'clock candle here for Soxel. 12 o'clock candle pushing on up to regain the 4-hour 9. Static points are valid here. So what we're looking for on Soxel is a support line to take us. We've got our 4-hour 9 on the regular trading hours all the way down here. Again, that support is what I was looking for us to kind of potentially backtest, but we didn't go that far down, which is good. London low somewhat held us here for the bounce, so we have the overnight low to thank for the repush. And crawling up here, we're going to see some resistance at the 409. We're not able to take out China high, the high on the overnight or China high here, and then we're looking at the daily 20 is really giving us the most static here. Three touches here in the last 24 hours. So we need Soxhlet to push up there. It's much more clear on the daily chart. So let me bring you guys here. Let me just bring you through the history here again for Soxhlet. So this range right here, where we had our actual first, breakout, failed breakdown, and then break out again. All tests on the level where we are right now. This is where we're trading right now, 135.66, and you can clearly see, this is the point of contention here. So this whole area here, where we are, translated over to here, where we physically are. This is our breakout area. So we need to get out of this zone. How do we know where we're comfortable here? Well, once we can start pushing higher highs on these candles, we will. So every candle that doesn't gives us a little bit of friction. The current candle we're in, we have a higher high and we have a higher low. So even though it's a little bit of a pullback on the daily from where we left yesterday, the candle is still in good shape. So as long as this candle closed in this configuration, it's fine regardless of where in the configuration the body shuts down. That means we need to do the same thing tomorrow. I'd like to see progressively higher growing candles for Soxhlet on the dailies, even if the range is tight and we don't always gain ground. That's just consolidation. So this looks okay. This looks like right where we talked about, static and static, getting through these points. It's going to be a rough ride for Soxhlet to puncture through this stuff. And again, it has to fight all this in order to get to our targets up here in the 200 range here. So let's see if we can continue to push on through here. Next level after that is going to be this particular line is a little off. Let me see if I can get rid of that one and draw a straighter line. Yeah, I think I can do that. Get rid of that puppy. Let me draw a real line here where that sits. I don't like mixing colors, but I guess we're going to do it. So there we go. So you can see the pullback down here, and you can see the static area on the wick tops, the bottoms, and same thing over in this range. So getting through this range here at this 144 range right here, 144 peak top, and the 135 range pushes us into the next level, which is going to start at 156. So about 10 points per level to get through here. Once we get through here, we're not done with the game yet either. We still got the next level, which is going to be up here. So lots of fooling around we got to do with Soxhlet to get pushed through all this. It's definitely a tough battle to jump through, but I think if we're patient, we'll get that nice bounce out of here, get up into this level here. You guys can all exit, and then we'll look to retest these lows or potentially even lower in about 2-3 weeks. Working on that now in terms of definitive time frame. MU, all right, look at this. Cup is formed. We have finally gotten back to the peak here. We are at major resistance right here, closing above the closing above 923 gives us a big push in the right direction for the overnight session. Rejection pushes us down. So we need to be careful in here. We need to push on higher, get above this a little bit. For target is still 1575. Consensus, see that here, 1575. So we still got a ways to go there. That consensus, any cuts to that, obviously, is going to give people some ammunition to start retreating a little bit. But regardless of what they say, this formation is solid. We've got a nice brokered bottom in here. Looks really good. Give us some trend line action here to kind of give us a little bit of a flow through. This is really kind of a prevailing wedge if you really want to look at that, and we are here. So we need to break outside of this wedge on the upside as soon as we can, and that will push MU up. CRDO on the back test here towards the 409. This will perform a little bit more than that. Again, 10-point spread on here, right? So just remember that you always have a friend to trade in CRDO, always giving you opportunities. Push up, you see the rejection, buy your shorts. Shorts come down in caution here, streamlined right on through. Let them rip. Goes on down, caution again, ready for exit here. No static given. on down. Now you see a green candle, but you have your buffer line here of the 30-minute 20. No reason to exit unless it crosses. It doesn't, pushes you down. You're in higher profit here as you're changing. This part gives you your first signal of a potential exit because you have 2 greens in a row with some momentum. You don't want to be spiked up out of nothing. Look at that. But you do have that 30-minute 370 here. You could use that as your guide. Any candle opens above on its own and you're out. Nope, nope, nope. You're still in. So do that again. Come back up again. Now we're looking at the 30-minute 9 rejection, which is also holding us on that 30-minute 370. That rejection continues. Push you down. You have no reason to have exited that put if you were timely enough to enter in on the tops resistance here. So you'd still be in that trade right now. Again, and now you're looking for 30-minute 9, which is now your top form of rejection. Actually, prior day open is. So anything over the prior day open on a clean candle, you're out. Otherwise, you're waiting for the 30-minute 9. 30-minute 9 comes down. Any open above that and you're breached out too. So also, you could always trim. If you're afraid, you can always move down to a smaller time frame. And when you're looking at things are getting tighter and you really, really like your numbers, you slide on down. You get off this chart, get on down to the 1 minute, use a 5-minute 9 here, and just wait till it breaches. As soon as it breaches, you're out. And that's it. Or you could always add a trailing stop, something like that if you wanted to too. So that's the method on this one. Love trading this. Waiting for this to kind of take back this trend line so we can play it a much longer way, which is what would be more exciting for me than all the day trading, but the day trading is fun. AMD, so on the recovery this morning, we weren't thinking of 500. It did punch back up there. I still wouldn't have shorted it there. I think AMD recovers here. That's the goal, is up, not down. But obviously that would have paid, and you could have done that. The plan here for AMD is to follow Yellow Brick Road. Here we go. Let's see. What do we got? Let me give you a little longer path. So there is the path. If you can't see that, like I just saw it and drew it, then let me know. We'll do a charting session and we'll help you guys with some charting. But very, very clear legs, drops, and we're in the next leg. So this next leg, let this one build. Here's your exit right here on this trend line. So we don't want to lose that trend line here. So that would be putting you right around here at 474. Actually, it's a little slightly lower. Give yourself a little breathing room. Always, wicks can kill. So just bear with that on there. So there you are on AMD on the long play. And like I said, I think we make some moves here with AMD. But whenever you get a beat down like this, recovery always takes a minute. Just for total transparency, the beat down that we took is already gone because all we did was erase yesterday. We're back to Monday. So this is Monday's levels that we're trading in right now. So I wouldn't really call this that much of a beat down. I would call it a preemptive run that was corrected and is now going to continue on up. So AMD did everything it needed to do. The capex expenditure or whatever that was, it was like 0.10%. It was stupid. So no reason for AMD to be kicked out like that. Tesla bounced off the 24-hour 4-hour 20. Look at that. Perfect bounce there. Rejection of the 4-hour 9 in here. VWAP is in control. We're sitting there like that. October 21st is the next earnings. Interesting. That's far out there. And we're sitting kind of in the middle. So we're in the squeeze here now. So we had our nice little run up here. Let me show you how the squeeze matters right now. Oops, I gotta get off that for a second. I gotta move this chart over a little bit. There we go. So here's our bottom. We've got our bottom, and then we've got that next point there. And now you can see the trajectory that we are following. So here's our trend line. Our trend line shows us a couple things. One, it shows us we have room to backtest still and still be fine with our upward trend. Two, it shows us that at this level where the 24-hour 9 is at 325, if I scroll this way a little bit, you will notice that we are seeing the same area of static as we hit before. So it's important for us to take out 326 1.25, which we have attempted to do yesterday and today and rejected. So that rejection, if it's not held by the trend line, could cause us a little bit more movement in Tesla to the downside. So I think what we're going to do here is we will find our support and be able to push through and continue to grow, because I do think that this is a nice steady growth spurt for Tesla here, and having taken its lickings here on each one of these, they show us that they recover. The recovery is good for Tesla. So looking for these types of things, we have our couple candles in red and then followed by a nice green push. That's where we're at on Tesla. Look at today. Today's really just flat. It's really not. I mean, I know that there's range here. 327, 329 to 320. You got a $9 range on Tesla. It's not a big deal. SpaceX. What do we need SpaceX to do? Well, I'll show you what I need it to do. I need SpaceX to do this. Just put that on there, and there we go. That is SpaceX. All right, there's my trajectory for SpaceX to go down. Okay, yesterday everybody may have looked at me a little sideways. As I said, I didn't really care that we launched up into the stratosphere here towards Mars with SpaceX pre-earnings announcement, and then only reason I had complete faith in this, they have never reported earnings, and I didn't think that they could possibly have formulated anything in secrecy over the last 4 months to since the IPO, wasn't even 4 months ago, to show us and share with us. So I was right. There's nothing to share. Earnings are great, right? Whoopee! Look, we lost and lost and lost, and we made a $1 billion revenue surprise while we're losing money. So it's okay, they did that, but obviously that does not cover the $1 trillion enterprise value that we have lost over here too. So $1 billion is not an impressive number when you are SpaceX. You need a lot more than that to spin the wheel over here. So anyway, expecting us to continue around to try to find fair value. I still need us to hit that $100 mark so that we can break it. That will be a very psychological level. Once we see that, I'll have a little bit more on SpaceX in terms of our formulation of the attack. You can see on the daily, this is a 5-minute chart, but it shows us a whole day's worth of data. Open up low, tried for the push up here, lost like head and shoulders kind of lost, and now we're back down in the doldrums here looking for the breakdown. So that's what I'm looking for there. Apple. Ugh, this chart's messy. All right, where are we with Apple? Well, we were at this trajectory. I think that is a no. We need to give a little more spice to Apple. Let's grab this one. Here's a better trajectory and one that makes a lot more sense now that we have some more candles behind us. Boy, is my Apple chart crowded. So let's clean this up here for a second. First thing I want to do is I'm going to look at the trajectory. Looks solid, so trend line looks good here. These static lines and the circles here are all based upon other periods of time. And those circles there, but we'll wait till we get into that to worry about it. So what's the problem right now? Well, here's the deal. Apple reached for the sky here, tried to break out. It did not succeed in getting to the top point here, which is 315. So our breakout at 313 was just shy of a good effort and was completely rejected. That rejection brought us back down to create the trend line here. We then tried to push up again, and we came back down to the trend line here. So we are bouncing off of the consolidated range in an upward trend, trying to break down. Want me to make this look more familiar? How about this? Let's see if you guys can. This. Now it should look a little easier for you. So now you got a triangle, right? So we got a wedge. So we're trading inside this wedge, and we need to break out or break down. Underneath us is support. We have the 4-hour 9 is support. We have the weekly 9 is support. We have the 24-hour 200. The 4-hour 200 maybe is support. The daily 50 right here. Okay, we're just on the daily 50 support. And we have the RTH 4-hour 9 is working against us. Let me move that a little bit here. Let's see if this is the most accurate one. Yeah, it is. Okay, so I'm going to move that RTH offline and move it into this way here. Perfect. Okay, so now you can see our 4R9 is what we hit here. That's the bounce point causing the rejection. So we need to push on through that. See a little RTH right there. I don't know if you can read it or not, but I like this method really better. Hold on 1 second, guys, real quick. You all right? No, you all right? Okay. Sorry. All right, back to this. Oh, I'm falling off my chair now. All right, back to Apple. So that's it for Apple here. We need to break out of the wedge here, and then we can start fighting off these other zones. It's just a huge pocket of MA disaster. Amazon with the rejection. All right, so Amazon trying to push up on higher. Today we had our consolidation day yesterday. MAs were looking like we could curl around back and take it. We had failure in that. That failure pushed us to test, and it was ultimately a rejection. 4R9 crossing the 20 right now. Downward spiral, here we go. We need to hold off at 269-ish right here in order to keep the structure. So let me just let me draw my exit there. All right, so let's see here. 269.03, so right there, that's our exit. This is where the structure breaks down from here if it continues. So if you're holding longs on Amazon, you don't want to hold them below that line. If we hold the line, which is very, very likely, expected positive, I do expect a bounce point here, then we can bounce up and higher. So looking back across, you can see here's the static and consolidation we've had for quite some time with this. So give that some credibility here and watch and see if we can hold this or not. If we do bounce, it's going to be a nice run. So take advantage of that. Netflix, oof, made a shot. Look at this. Finally made it. It made it to my circle and rejected itself. So, all right, I'll sit back and relax and let's watch this thing turn around. What it is doing, okay, which is fun, is here is what Netflix is doing. It is following its trend line on up here, okay, and holding, and it's managing to do so. Let me get rid of this line here because it doesn't make sense anymore. There we go. Following this line and holding, and if it continues to hold, then we can get into an area where we actually could short squeeze people and we could actually have some fun here. But this is target one at the 75 range. It was completely rejected. So I want to see this kind of touch back on the trend line and turn around before we kind of head out anywhere else. So Netflix is on the radar. I'm just taking a look at it until it actually performs here. Then we'll see about where we can go from that. All right, Google. I didn't see the catalyst for Google, and I know somebody asked about it earlier, and I actually was going to look it up, and I didn't. So I can't tell you what's going on here, but this chart is Amazon's chart, so you're seeing that right now. 361 was the level here that I wanted to hold for Google, and we have passed that. So here is the exit here. So what I'm looking for is for this candle to close back above that line. Otherwise, we're just going to sit out for a second and see where we can get our supports. They're down in this range here. So I don't want to slip that far down with Google. I actually was excited for the run we had here. We rejected off of the prior high. And was not pretty. Not a pretty one for Google. I thought for sure everything would be all right here. And let me see. What was the catalyst? Does anybody, if anybody knows, just type it down for me. I didn't have a chance to look at this yet. Here, but clearly this is where we needed to be, and we have lost 2 main points, and we've lost. Here's trend structure. Let me just move this out of the way for a second and get that clear for you. So I can show you the intersection. So this is where that line makes sense. This is why we need this 362 or 361, whatever this is, right here. That's why we need this to hold, so that we don't lose the forward momentum that we have built here with this high-rise structure of Google. It turns around. I just got to find the bounce point for you. When I do, should be a good entry. We should see a nice recovery from Google when we get this. Google has been really hard to play lately in terms of its pullbacks. So let me figure out a better plan here for this one. Obviously, looking to find a good entry at this point. So that's where we are in Google. Meta in consolidation here. Again, here you got the 420 We got the 409. We're sitting in between. We're going to get a squeeze point here. That bottleneck pushes us in one direction. Currently looks like, and from trajectory, it looks like we're in here. I'll give you the bottom one. This one's no longer valid, but I'm going to stretch it out for you anyway. I don't like this particular trajectory, but that is the one that we have, the overlying trend that we have to play with. 409 on top of that too, so this would be my hinge point right here if we go any lower. Looking for 574.81 for the bounce. On Meta, 571, yeah, what is that? 574, 60, 80, 574 something, 575, whatever you want to call it, right there. Here's my stop right below. All right, why don't I give it to you? I'm going to push that on up there for you. So there's my stop directly below on the pink line. There's my entry on the bounce, stop loss below, and then upwards and onwards. This isn't going to go quick. This consolidation that we're seeing right here is going to extend out further as we continue to go. We have to take the easier play is going to wait until we take this 603, which is, yeah, it's going to give us about a 10-point jump into the next pile, which is the monthly 9. So that's the game. Stocks are hard right now. They actually are. They're a little bit more difficult than they used to be. This is going to be a little run. Everybody loved that run from March through April. Right now, we have to figure out all that consolidation, test all these prices as we continue to try to push higher. We are pushing higher though, so don't be panicked about any of that. New candle on SPY, looking green. And if we can close above yesterday's close price, right now we're at 34 cents above. If we can close above that, we've got a good chance of giving ourselves a little push again tomorrow. If we don't, or if we reject in the overnight session today's high, overnight high, or high in general, we will be back testing and looking for that 4-hour 9. So that is the play for today and in the overnight. You can see everything that I told you that you needed to look for today here on the VIX and ES and the interaction there, and that has so far been our best indicator for traveling for the day in terms of price action. VIX, like I said, inflated. VIX was suppressed. I think VIX is price searching right now. If we do get down into this range here and close down lower here, then we will see ES continue to break out, try to break out from this level here. But for right now, it's not a horrible day at all. Just I'll take an easy day like this over any other, so that we can just kind of relax a little bit off that big run and not have to take a massive pullback to correct all this in price search. So today looks pretty good. All right, let me just follow the trend. Just follow the trend, boss. Just follow the trend. Exactly. Thanks, Insulator. All right, I have time. Anybody need anything? Anybody want me to look at anything? Let's see. Look around. I have any other comments? I got that. All right. Waiting patiently for angry people. MHM, you got nothing to say today? My gosh. All right. I will. I'll shut her down, and I'll be on the floor if you guys need anything. And otherwise, look for today to hopefully push up a little higher, give us a little bit more ground. Probably close in the middle here somewhere. Not looking for any great things here. Oh, let me just flash over to the data. So data-wise, we've got Fed Cook speech today at 4:05. That's going to be worthless. That doesn't do anything. Tomorrow we got challenger job cuts, jobless claims at non-farm, productivity, labor costs, and we got some T-bills too. So tomorrow's data looks to me, obviously everybody feeds off these catalysts, so they over-exaggerate everything that comes our way, but it doesn't look like a high push day for us. I think the fears of rate increases are off the table. I think jobless numbers will not affect that tomorrow. I will tell you the trend that I've been seeing as I research all these jobless numbers and job additions and non-farm stuff. The trend is that we kind of lie and go back and change these numbers. So everything kind of is going to print close to projection, and then they will, if you go back and look at the prior schedule, you will see you will see yourselves. You'll be shocked at how much these things change. All right, MHM, you got your questions now. All right, first one is prudent to keep cash on hand for more backtests. I want you guys all to work on building a cash position for the next 2 weeks. I'd like you to have 20-30% of your portfolio in cash at that point in time. Take profits along the way here. Build up a little bit of a cash position. I will try my hardest to get you the ripcord day. I will always be short. So, in other words, I will miss the top. It is just a flaw I have. I can never quite pin the exact top for you guys in time, but I can give you the floor every day and all day. So as long as I give you the floors and you guys manage your tops, I'll tell you where I think we're going to break, and it usually goes a little bit further than that. So you get a little couple extra points if you keep carrying on, or you can be prudent like me and take the top part off and worry about the next bottom so that you can re-enter and do so with cash. So what I'm looking for right now is trying to find my top here for the breakdown. I will call that likely early, as I usually do. It is not today. It is not tomorrow. So we have some time. Looking to create some cash so that when we get this dip, we'll see. The run we just had changes a lot of the trajectories around. So these last 4 days have completely screwed everything up a little bit. So it's going to take me a second to go through. None of it is in a bad way. It's just in a projection standpoint of where this dip is coming exactly. So I may have to push it out a little bit. Which is fine. I hate doing that though, because when we get close to those dates for where I have pushed something from, then that can feel a little uneasy. Which is why I don't give you the dates. All right, so yeah, all fine. Looking for cash then, but we're not in a crisis here, MHM, to set up for that, so you should be good. Soxel, MU, WC, SNDK earnings tonight will pump or dump it. Both. It's going to pump and dump, and it's going to cause all sorts of problems. But SanDisk earnings are going to be great. They're one of those stabilizers. But the market's reacting right now to profitability, expenditures, line items that aren't usually as important in here. And when I say as important, I mean they cause 5 to 10% shifts in any particular ticker versus a little whack. Instead, they get a massive push on it. So. I expect volatility, and that's all I can tell you on that. I don't think it warrants doing anything with. I think we're in a good spot on everything. So let it go. Hedge. You want to hedge? Hedging's great. You're in a bonus spot if you hedge. If things go rocket ship on you, then your hedge is worthless, and who cares if things go and hedge out. Use a 20 delta. Use a delta that's meaningless unless we get a major pullback. Then this way you don't have to put yourself in a bad situation after good. But for me, I'm just gonna ride this out and see where we get to tomorrow. I mean, 4 days on SPY like this, everybody's looking for the pullback. I think we get the pullback, but I don't think it's enough to really worry about. All right, the run meaning the recent euphoria, like too much of a push too fast. Yeah, the run meaning exactly what you wrote. The run that I'm talking about is the recent euphoria, too much push too fast. But I'm not going to say that that's not warranted. We had 4 weeks of consolidation and a high-ranging, volatile consolidation, and this is the result of that. Pent-up demand pushes through and gets going. Low volume, summer trend. It's all good. Longer dated calls for MU and Soxel. Thinking I put my remaining cash into Sox S or MUZ. No. Don't do that. Save your remaining cash. If we go down, okay, you have a large enough account. If we go down, and then we find the floor, and then you sell some puts at the floor, and you cash out on those and roll those into your long positions, and then you're safe. That's if you have the cash. If you don't have the cash, that's why I want you to build a cash position. But no, I don't think I would hedge that way right now with Success right here quite right yet. You could do a little bit. I just wouldn't do a full hedge here. So do a little bit. Make yourself a little easier. We've got to work on our bottom strategy with everybody too. You guys, we need to start raking in a lot more money. Yeah, my bias is a little bit too higher right now. Yeah, we're not quite topped out yet. My bias is we're going to pull back, but It's not today. Not yet. We're getting there. Little test in there. Uh, dude, MHM, quit your job. This is financial advice. Quit your job, and we need to have some meetings to get you straightened out, so we can get some good strategies in place. I'll sponsor you. Yes, I can afford. I tell you what I'll do. I will give you. I'll treat you like a thoroughbred racehorse. I will give you the finest carrots money can buy. All right, and with those carrots, you will turn them into cheddar. All right, enough playtime. Anybody else have anything else for real? Alrighty, I'm gonna shut this thing down and post it up for you guys. You guys have any questions, complaints, concerns? Ginger's somewhere. Find him. Thank you.
If you wanna hit the river, you need to be a river.